So good morning, guys. Welcome to today's episode of Trader Psychological Talk with Sophia Forton. And in today's episode, I'm going to be teaching you guys on how to trade double top and double bottom. So one thing I want you guys to do as you're coming up on this call, just mute your microphone so it doesn't interfere. So as you're joining, just mute your microphone as you're joining. So as you're joining, just mute those microphones so it doesn't interfere with our discussion. So give me a few. Now, I want you guys to confirm if you can see my current screen. Is a screen on GBP USD, is a chart, yeah? GBP USD, if you can see the current screen is loading right now. It's coming up in a short while. So in my last in the last episode, I taught you guys about my trading strategy, yeah? Psychological levels, high and low of the week, charts patterns, and also the use of trend lines, yeah? So I spoke about that in my episode, my last episode. The video is the recording is on my YouTube channel, so you can check my YouTube channel if you're not part of that class. Yeah, it's on my YouTube channel, Soji and Soji Afoton. So you can check that. You could check my channel for that, for the link to that the previous video. Yeah. So welcome, guys, and it's an honor having you guys on this call with me. Yeah, it's an honor having you guys. So today I'm going to be teaching you guys how to trade double tops and double bottom. And one thing about these two chart patterns is that they are reversal patterns. Yeah, in chart patterns we have reversal patterns and we have continuation patterns. But for this class, I'm going to be focusing on just these two chart patterns, which are double tops and double bottom. So that's the only thing I'm going to focus on this class. There are a lot of there are a whole lot of chart patterns, so it's not just constrained or limited to just double tops and double bottom. We have a lot. There's head and shoulder, inverse head and shoulder. There's falling wedge, rising wedge, bullish flag pattern, like flag chart pattern. I mean, bullish bull flag, bear flag, pennants, symmetrical triangles, and all that. There's a lot. But as a trader, you just want to focus on a few. You don't have to trade everything. You just want to focus on the one that is more popular with the pairs that you trade. And there's also triple tops and triple bottoms. So there's also a chart pattern, triple tops and triple bottom. So let's just get straight ahead. Let me share I think the screen is ready. So yeah, so I'll just be using example, just how to identify it. That's the first thing you want to know. How can I identify these chart patterns? The moment they start printing on my charts, please ensure that all microphones are muted, yeah, so it doesn't interfere with this meeting. Let me just ensure that all mics are muted. Okay. So let's get started. So as you're coming in, just ensure you mute your microphone so it doesn't interfere with the class. So how do you identify chart patterns? That's the first thing. You want to know how to identify, because when you're able to identify it, that is when you'll be able to trade these patterns. If you can't identify them, it will be difficult to trade it, because it is what you know that you can put to use. It's the knowledge you have that you can apply. If you don't know about a thing, if you don't know anything about a thing, it will be difficult to apply any knowledge on it. So how do you identify these chart patterns on your chart the moment you start seeing them? So I'll be talking about, let me start with double top, and let me start with double top. So as I said, double tops and double bottom, they are both reversal patterns. So these two patterns, they are reversal patterns. That is, they are signifying end to a trend, like they are signifying change in a trend or end to a current trend. What I mean is that if we are in an uptrend, whose mic is unmuted, please mute your mic. If we are in an uptrend and you notice that you notice a double top at a particular support level. So it's not just on any place on your chart, just not any level, at a particular resistant level rather. You notice a double top at a particular resistant level. So based on other conferences that could be present at that level, we could see a reversal, a change in direction at that moment. Or if we see a double bottom at a particular support level with other conferences, we could see a change in direction from that point. So that's one thing you just need to understand. They are both reversal patterns. So how do they look? This is how these two chart patterns, this is how they look like, both your M and your W. So that's how they both look like in picture. This is your double tops. It's just like you're writing an M. So you have these push up, you have this tip over here and this tip over here, and you have this point, then the push down. So we would explain how to take these this trade, how to really trade them whenever you see them on your chart. And this is a picture of your double bottom. So you always see it like this. Now there's one thing you need to understand about these chart patterns. When you start seeing them on your chart, they are not going to be picture clear as I just drew them right now. They are not going to be picture clear. Like you could see this one at picture clear perfect, yeah, picture clear perfect. But when you start seeing them on your chart, when you start seeing them in a live market, they won't be picture clear as this. At times you could see them because there'll be candlesticks, and you know, candlestick, they always give us weeks. Yeah, that's one thing you need to understand. So it won't be picture clear. So you don't have to have you don't want to have this kind of expectation that you're expecting the chart patterns to be exactly as it is as I have drew them on my chart. They are not going to be picture clear. So how do you trade these chart patterns? Now the best way to trade them is to always wait for the completion of this second leg. Always wait. Whenever you see like a move like this around the key level in your chart, now this is for this is double top, and whenever you see this around the key level, maybe let's say for example we are having a key level around this area, price has been rejecting around this area, and you notice price has pushed up to this point, it got rejected, it pushed down, and it's coming back again. That should give you like just a brief knowledge that at any point in time there could be a double top. Why did I say so? Because you've seen the first leg that has been formed, so you're just waiting for the completion of the second leg, and you just want to watch for how candles will react at this point, in addition with other conferences that you trade, to start going short from that point. So you don't want to just go short the moment you see this double top around any point. No, there are other conferences that you could add depending on what you trade. So there are other conferences that you're going to add before you decide to take that particular trade. Now, there's one thing you need to understand about this. Now, taking your entries at these points or at this point, it's called a risky entry because you're not yet certain. You're not certain yet if this thing is going to move. If you start taking, or maybe the moment these second leg form, you start getting in at this point, it's still a risky entry yet. Why did I say it's a risky entry yet? Because it's not yet certain. This particular this neckline, this part is not yet broken, because this is a structure. Now, in first, there's something called market structure, when the market starts creating higher high, higher low, lower high, lower lows. Yeah. So this is a low. So this particular low is not yet broken. So you can't yet just make decision that, okay, because this M pattern has formed, then it means the market will just start moving downwards. You want to wait for this particular low to be broken. And most times in chart patterns, this is why it's good to always do a lot of back testing, like a lot of learning. Most times trading chart patterns, whenever this level gets broken, the market most times would come back to retrace this level yeah, it will come back to retrace this point before it moves downward. Most times, that is what happens most time. It will retrace. I think I lost my internet. Let me see what's wrong. Okay, I'm back. Yeah, I think the internet, okay, is back. Sorry for that interruption, guys. So most times, it's going to retrace, it's going to, let me draw it again. Let me draw it. I lost the internet before. Let me draw it. So I'm going to redraw this as well. Let me draw it again. So sorry for the interruption. And this is it. So you've had, this is your first leg, and this is the second leg. Then you are having this. Before the market will start moving down finally, like most time it will move this way and come back to retest this neckline before it start pushing down. So I will readjust this to this point. Yeah. So at this point, entering at this point is a risky entry because you're not yet certain if it's going to move. You're not yet certain. So entering at this point is a bit risky. Now, entering at this point is less risky. Why did I say it's less risky? Because we've broken this particular low. Because we have broken this particular low, and the market is now coming back to retest this low, this point, this neckline that was broken. So when you enter at this point, that is it's a reduced risky entry. So that's the best way to trade chart patterns. And your stop loss will be at this high, at this neckline, and then you take your target. So you could take your entry around this point, but just know that at this point it's still a bit risky because no one can determine how the market will move. We are just acting based on the information we are getting from the charts. We are not like predicting. We are reacting based on what we see. So we are not trying to predict that the market is going to move this way. We just want to read what the chart is saying, study the chart, get information from all the data on the chart, and then just make our decisions. So when you enter at this point, it's still a bit risky at this point. But when you enter at this point, when it's coming back for a retest, then this is a less risky trade. Because now this particular low has been broken and the market is now coming to retest that low. So that's one thing you need to understand. You need to grab this. Now, it's not every time it will go back for a retest. It's not every time we are going to have a retest like that. Now, it's also the same thing with this, with double bottom, the same thing with double bottom. So it's not every time that you're going to have a retest, like, I mean, a retest like this. Let me wipe that off. So let's say we have something like this, like this, like this, like this. Let's say like this, and then a retest before it starts pushing up. So it's when this particular neckline is broken and it comes for a retest. So at this point, it's still risky. It's still risky at this point. But the moment we break this high here, so that's when we break it and it's coming back for a retest. Most times it happens, but most times we don't see it because we just think, oh, it's at this point. Now you notice that most times, whenever you are trading your double bottom, double top, moment the second leg has formed and the market it has pushed up, you would notice it is coming back for a retest. And whenever it's coming back for a retest, most times it will get to this level. You start noticing weak rejection around this level. One thing you need to understand, one thing you need to keep at the back of your mind is that it doesn't retest every time. It does not retest every time. But most times there would be a retest. It's just like your head and shoulder. It will be coming back to retest the neckline. Yeah. So let's see on the chart, how do you identify it? So how do you start identifying so that you can start? You don't want to identify it when the trade has already happened. Oh, I missed it. Oh, that is an M pattern. That's a W pattern. I would have taken this trade if I saw this. So how can you be able to identify these patterns the moment you start seeing them? How are you able to identify it the moment you start seeing them? Now, I'm going to use examples on the chart, the trade we took this week. I'm going to use them as example. So the first, let me see, the first trade we took this week. Where is the first trade? I think it was this one. I'm not sure if this one has an M pattern. Now let's look at this particular trade. So we're looking at these two, this one and this one. So now let's look at it. Now you will notice GBP/USD has been on a bearish trend for a long while, like for more than a month or 2 months. It's been on a swing bearish trend. Now when market got to these points, it pushed up, got to this point. We had the high of the low of the week, psychological level, and this is a trend line. And then we had just multiple rejection, just 2 week rejection, and then we took this trade. Now, if you look at this particular setup, look at these points. Let me take this one a bit high. If you look at these 2 points, this is an M pattern around here. Now, another thing you want to keep in mind is we have mini patterns, like mini chart patterns. Like there are times the chart patterns could be very tiny, and there are times it could be big as this, because this is an M pattern. Now, why did I say it's an M pattern? Just take a look. This is the first leg. This is another leg. This is the second leg. And then the market push down. So this is an M pattern, but this one is large. It's like the M is big. Yeah, there are times you could have tiny ones. You could have tiny ones. Now, you want to wait whenever price is always at your psychological levels, but that's the levels in the market where we have most of these patterns. So whenever price is getting to maybe your psychological level, your high and low of the week, you just want to be on the watch to see any of these patterns. Now, most times, whenever price gets to these levels, and you see this first leg, maybe you notice this first leg, it's happening, and you notice the price started dropping. Maybe you might be thinking, oh, I'm missing out on this trade. No, you're not missing out. Most time on GBP/USD, if there's no day, I told my students, I think it was this week, maybe on Thursday, that almost every day, GBP/USD, there will be a chart pattern. Almost every day. Just if you check the chart if you check this particular week from Monday to Friday, which was yesterday, there was no day that you won't see either an M pattern or a W pattern. Almost every day. So you always want to wait for the completion of this other leg at this point before you get your entries. And if you are trading this particular strategy, which I taught last 2 weeks, you just need to watch out for weeks rejection. Once the second leg has formed, just watch how candles start reacting around this point. We took this particular one. I'm not sure if we took an entry on this one, but we took this. Now this one as well, this is an M pattern as well. This is an M pattern as well. Now, the market will be, for an M pattern, the market will be moving from bottom, moving up, then get rejected, then move up, and then before it starts pushing down. If you are trading this strategy, all you need, once this first leg has been formed, and you notice that the market gets to this point, gets rejected, and is pushing back up, once you notice that this second leg is about to form, you just want to watch for weeks reaction, like multiple week reaction, how the candlestick are reacting. You just want to see weeks rejection before you start making your entries. Or you want to make your entries maybe whenever you've seen like a bullish candlestick, no, a bearish candlestick rather. That's if you want to sell. Maybe you see a bearish candlestick pattern or any other chart candlestick pattern that tells you it's that talks about going bearish. So that's one thing you need to note for M patterns for double top. So these are mini double top. There are some they will just be very tiny, while there are some it will be large as this. Now there's one thing I want you to note. If you identify double tops or double bottom on higher time frame, like let's say for example on a 1 hour chart, on that particular trade, just target like 100 to 150 pips. If you notice it on higher time frame, just know that the pip move could get you 100 to 150 pip on 1 hour time frame. If it's on 4 hour time frame, you could get up to 200 pips. And if it's on higher time frame like your daily chart, you could get up to like 300, 400 pips. 300 or 400 pips. Now this particular one as well, at this point as well, this is also this one happened during Asian session. Yeah. So this one happened during Asian session. So this is also an M pattern. This is an M pattern as well. So for M pattern, the market will be moving like the first leg will be bullish. The first leg like this would be bullish, and then would have rejection. For the second leg, it will push up a bit. Then you notice how it will be unable to break this other high. There are times it could break it by maybe 10 or 15 pips. So there are times it could break this other high by 10 or 15 pips, and there are times it will not even move up to this other high. It could just be below it by maybe 5 or 10 pips. So I'm just showing scenarios of how you could have those chart patterns on how you would see them, the way they would act on your chart. Like you could have it like this, like this, like this, or you could have it like this. It could be at the same high, and it could be like this. Most times, that's the 3 ways you would see those chart patterns. The same thing for double bottom. You could see it this way. Either they are on the same place or like this, or you see them this way. So most times it will just be just 10 pips away from it, 10, 15 pips. It won't be much. Yeah. So that's one thing. Now let's look for a W pattern. I think I saw one earlier. Okay, this one. Now for W pattern, most times the market is coming from like is a bearish market. The first leg will be bearish. Then we could get a sort of rejection around this point. It pushed up a bit, maybe like 20 pips, most times 10, 20 pips. It could push up the first leg, like from let's calculate. Let's see how many pips is this. So from this point, so this is about 35. This one is 35 pips. So once you have the first leg, once you start seeing rejections, most times you could have entries around this point. Now, most times you could have entries. Most times, the way we trade, we do on this first leg, we have entries on this first leg, but we are very conservative. We'd have entries on this first leg. And once the market pushes up, the moment we start noticing multiple weeks rejection around here, we jump out. Then we wait for the second leg. This is where we now get in, like here, because it's when the second leg formed, that's when you can be certain that yeah, this move is that we can trust this trade. So these are those things you want to grab and understand about chart patterns. So you will notice, I think some guys have joined this. Okay, no one is there. So you would notice on this particular one. So we have it. So trading W pattern, that's double top. The first move will be coming from, it will be bearish, like coming from top to the bottom. Then you get sort of rejection around here. It will push up a bit. You get sort of rejection. Then it will push down. Then you just want to monitor for how these candlesticks are going to react on this second leg. So the next thing to get a confirmation entry could be you could use, for example, it depends on your confluences. Our own confluences is we just want to watch how the candlestick are reacting, watching for wicks rejection. Once we start seeing multiple wicks rejection, we start getting in. Once we start seeing multiple wicks rejection, around this second leg, we start getting in. Now, how everybody trade is different. Some people could be maybe after they've noticed like they want to see a bullish engulfing, or they want to see maybe a tweezer. Is it a tweezer top? Yeah, it depends on, everyone has the way they trade. Now, mine is once I just start seeing multiple week rejection around here, or if I see a morning star around this point, if a morning star formed around this point, most trade I've been taking recently, once I see a morning star form around this level, I'll just start getting in. Or if I see an evening star forming around this this resistant level, I would start getting in for a short the trade. So these are you trade charts patterns, both double bottom and double top. You just want to wait for the second leg. You need to have this patience to exist. You want to have this patience to always wait for the second leg to form before you start getting it. So I said it before that I'm not going to make this class to be too long. So I just want to take a few questions. So if there's anyone that has a question, I just want to take a few questions before we call it a wrap. Now, the recording, I will post the recording on my YouTube channel. So those that couldn't meet up, that joined us late, you can rewatch it on my YouTube channel. So is there anyone that has a question? I might just be able to take one question. It has to be on what I just explained. Don't ask me question aside what I taught in this class. So let me switch back to, let me take question. So thanks guys for coming on today's call. So anyone with a question, I just want to pick, you can drop your question in this chat if you can drop it in the chat if you have any question there. So we have about 12 people on this call. So welcome, thank you for staying on this call. Dayo, Henry, Kelly, Michael, Nonso, hey, good morning, Ademola. If you have a question, just drop it so I can attend to it very fast. Now we'll drop this one on YouTube. This will be on YouTube channel. To be on YouTube channel, then I will send the link to I'll drop the link in my WhatsApp on the mentorship group as well. Do we see the stars on any time frame? I don't know what you mean by stars. I don't know what you mean by stars. If you're talking about the chart pattern, you can see it on any time frame. I've said it earlier. 15 minutes, 5 minutes, you can see chart patterns on any time frame. The higher the time frame, the higher the put move you're going to get. Like if you see chart this double top on daily time frame, you can, I'm certain you can get up to like 300 to 400 pips on daily time frame. On higher time frame, the higher the time frame, the higher the pip that you can get. Or is it the morning star? Okay, if it is the morning star, yeah, you can see it on any time frame. Yes, morning star, evening star, you can see it on any time frame. Morning star is, whenever you see morning star as your support, it's a pattern, a reversal like pattern, like you want to start going long. Why, if you see your evening star in a resistance point, you want to start going short. But don't just take trades based off candlestick patterns. You need to have other confluences to it. Link. Do I have the link here? It's Soja for Tan. That's my name on YouTube. Let me see if I can get the link. So quickly before we go, I have a mentorship program. Yeah, I think I have one of my students here, Mr. Odesomi. Yeah, he joined us on this week. It's doing quite good now. Yeah. So I run a mentorship program, and it's for 12 months. If you would like to join. So we have our classes every Monday and Thursday. Monday beginner session, Thursday advanced class, and we have a WhatsApp group for continued support. So the price is 50,000 naira. Let me quickly drop the link here. You send me a message on Telegram. So sailor.co/the pips. So that's the link to get more information on the mentorship program, or you can just message me at the real Soji on my Telegram. So at the real Soji on Telegram. So we have beginners to advanced classes. So you also get access to previous classes. Like we have a whole lot of class I started in February, and I think we're on the 8th week So there are a whole host of recordings, videos. Each trade I sent to my Telegram channel or I share with my students, I always do a review of those trades and I post it somewhere so that other students that are coming in, joining us, they would also learn the way I trade and know why I take some certain trade. So you can check it. If you want to make payment, you can as well send me a message on Telegram. If you want to chat me on Telegram at the real Soji. No, as I just said, you wait for weak rejection. We don't just jump in because we are seeing it. You still want to get extra confirmation. One other confirmation I use is weak reaction. The way candlestick reacts, weak rejection, or the candlestick pattern I trade is morning star or evening star. If I see any of those, in addition to my other conferences, not just one, in addition to about 4 or 3 conferences, that's when I take it. Not just based because I'm seeing a double top, then I want to jump in. No, I want to see other conferences on it. So if there are no any other questions, I'm going to end this session right here. So thank you guys for coming on today's session. Thank you, Dayo. Thank you, Henry, Kelly, Michael, Nonso, Odesomi, Overcomer, Polish, Sulaimon, Timothy, and Yusuf. So thank you for coming on today's session, and see you again next week, same time. And same time, yep. So bye for now. I'm just going to end it now. Bye for now, guys.